Welcome to another video. Welcome back to the Royalty Family, Trading 101, everything that you need to know about the Forex market or any market. With that being said, today we're going to cover the ins and out on one of my books, Success in Sight, Volume 1, 60-Day Challenge. This is a workbook. This book is designed to teach you the ins and out about the market as far as market structure, uptrend, execution. This is the blueprint itself. This book right here is designed to help those that don't have the time to be in the Zoom calls, that don't have the time to be in front of a computer or the laptop for hours, or even to be on YouTube to learn. This is for the hands-on learners, beginners, intermediate, and even advanced traders, to be honest with you. Not a lot of reading in this book, just hands-on work. 60-day challenge, lock yourself in, right? And get into it. All right. Step up to the plate. If you believe in yourself, you put in the work, you're going to come out on top before you even start, before you pay anybody else to learn anything else about the Forex market. This book will give you the general idea as far as how to mark your zones, how to mark your fib, what does an uptrend consist of, what does a downtrend consist of. This is the book for you if you are new to the Forex market and you want to understand the ins and out of the market when it comes to structures, the highs, the lows, the zones, when to buy areas, when to close areas, when to place your stop losses, when to cut it short. All right. Ins and out, Success in Sight, Volume 1. Amazon, check me out. Guaranteed you're going to learn to understand the ins and out of the market. That I can guarantee you. Okay, with that being said, today we are going to cover a few pages that's in my book, just so you have a general idea of how it is, how it works, and what it is that you are about to do when you do get this book. Okay, so with that being said, Volume 1 covers uptrend market, also considered as a buyer market. So we could go over that, right? So when it comes to the Forex market itself, an uptrend, okay? An uptrend is pretty much a buying market, okay? A market that's going up, okay? It's just going up. Very simple. So it's just different terminologies to describe a buying market. Also, I forgot about this one. Bullish market, okay? A bullish market, okay? Boom. So this book covers all the ins and outs of how to learn to understand the market. Think of it like this, right? When you have a child and they don't know how to write the ABCs, this book basically has structures like so, giving you highs, lows, okay? And then it will have dotted lines to give you the guidance on how to draw the zone. You will trace over these market dotted lines. And then you're going to repeat that for X amount of pages, more than 20 pages. And then you will see something like the same structure before, where this time you would have to do it on your own. Okay. Because you learning to do so, the ins and out. So with that being said, let us cover a bullish market where we go over higher highs and higher lows. So square one, bullish market. So a bull market, okay? That's a bullish market, sorry. A bullish market. When you look at a bullish market, you are looking to see higher highs, okay? And higher, lows, all right? It will look something like this. The market will go up and it will stop, okay? Then it'll retrace down. Then it will stop. Here, will be considered as a high point. Market stops here, okay? When the market goes, let's do blue. Make it very simple, black and blue, right? When the market goes up and then stop here, okay, at this point, this will be considered as a new high once market comes down, okay? Now, when the market goes back up again, remember it has to stop and goes back up again, like so. And then come right back down. So what we're looking at is basically textbook market structure. And it looks perfect. So it's not always going to be like so. But you will see structures like this, of course, in the monthly time frame, weekly time frame, and daily time frame. That's where you get the general idea as far as where is the market going, how clean the structures are. Okay. So the bullish market, okay, will be giving you points where each point is higher than the previous one, right? Like so. This point here is lower than this one. So this is lower than the next one, right? So that means this high is higher than this high, where this high is also higher than the previous high. Okay. So in a bullish market, you'll be looking at higher highs, okay, where each high is higher than the previous high, right? Now, the bottom part of that high is the low point, right? We call these areas, or these areas are considered as higher lows, right? Why? So even though this is high, right, it is going to be lower than the last point, which is this one. So this is another high low. So it's stepping up, but it's lower than the previous, just like this one is higher than the previous one. So in a bullish market, these are the structures you're going to be getting. Okay. So let's continue. All right. We're going to be very, very clean with it. So in the uptrend market, you get higher highs. Okay. Let's jump on. Yay. And higher lows. Okay. Each high is going to be higher than the previous one. Okay. Making it clean and simple. All right. So one more thing with this. All right. So each point, okay, each point is a turnaround point, which means market had given you a price action. Okay. It will be an engulfing price action. It means the market stops here and it turns around. Once market stops here, it turns around. This point is being marked. This is where we put our zone, right? So that's a high, right? So we look for market to break this high, like so. See, when it went up, it passed this point, okay? It broke through it, stopping up here, which now give us a higher high that is higher than the previous high, okay? Before it left, this is the low point that it left, okay? That was the last low, okay? Now, when the market come back down, like so, right here, boom, it stops here, and then it went up, passing the last previous point, which is the previous higher high, right? So that was the last turnaround point. So this is where we would naturally place our zone. We're not going over that yet, but this is a previous high point. Once market goes past this high, it goes up and stop at a new level to then fall back down again, the retracement, right? At this point, now this is our new high, which is higher than the previous high. Once the market leave this specific level area, this area right here, once it left that area, we now have a low, but it is a higher low. It just means that it is higher than the previous low. Very simple, okay? As the market continue, this is a high low. It stops here. It went up to go give you a new higher high point, okay? Once it leaves this area, we now have a new structure point, a new turnaround point, and that structure point at the bottom is a new higher low, right? That's why when I said in a bullish, okay, in a bullish market, okay, in a bullish market, the market will give you higher highs, where each high is higher than the previous, okay, and high low. Let me change the color. A higher low, okay. So I just wanted to make sure I repeated that one more time, but we're gonna go more in depth, more in detail with that, okay. So let's go a little bit slower this time, okay. I'm gonna go ahead and just put the structures in there, trying to create as much structure as possible. And we're going to mark the higher highs and the higher lows. And I'll tell you, of course, the order that it comes in, again, just a bit slower. So it's a lot easier to absorb, a lot easier for us to understand, okay? Let's use that. Make it colorful, right? Market goes up. Okay. All right. So this is a bullish market, an uptrend market. This is a market that is buying up. Okay. So naturally, when you get into the chart, you're looking at the chart, you want to identify what type of market it is. Is it a bullish market or is it a bearish market? Now, one way to identify if the market is a bullish market or a bearish market, you need to look for the structures. How is it looking like? The structures will be you identifying the higher highs and the higher lows. If the market is giving you higher highs like so, right? And also, after each higher highs comes the high lows, okay? Let me change the color for this one also. It'll be better to see that way. Okay, cool, right? So we got higher highs, okay? And then we have, oh, it's not changing. Come on. Okay. High, low. What? Okay. No matter what. High, low. All right. Higher high, like so. And then a higher low. Higher high and higher low. Higher high. Okay. Ooh, let's make it a bit cleaner. Too messy, right? Higher high. I don't want to block the screen. That's why. And a higher low. Okay. This is an uptrend market. This is considered as a bullish market. That's why, that's what you, of course, you will be learning in the book, understanding and identifying the highs and the lows. Okay. Now, let's go to the next page to reconnect. So now, the one I just did is textbook, a perfect uptrend market. It just looks so clean and vibrant. Now, it's not always going to be so clean and pretty, where the structures are so easy to understand where the highs and the lows. Now, sometimes in the bullish market, right, the concept still remain the same with the higher highs and the higher low. It's just that this structure is going to look a bit different. Okay. So you might get a small downtrend within the higher trend. Now, let me work as I speak. That way it's a lot easier to understand, right? So we have a bullish market that is giving us the high points, right? Market goes up like so, boom, right? And it comes down. Clean, easy, right? It's very simple. Now, a lot of time, market will do something like so, right? You see that? And then boom, go right back up. Okay? A lot of time it will do this. See that? And then fall. Okay? Come up. And then shoot up. Now, let's go in detail and regarding to the structure. Now, this is also considered as a bullish trend, a bullish market, where it's giving you higher highs and higher lows, right? You have to always use the higher time frame. That way you don't get confused with the structure or within the by itself. There's a lot of small infrastructure like these right here, right? So a lot of time within the uptrend, you're gonna get a downtrend. Okay. Within a downtrend, you're gonna get some uptrend within it, right? So look, this is the previous high. Market went up to give you a new higher high. But of course, before it went up to give you a new higher high, it had to give us a low, right? That was the previous low. When market went up to give us a new higher high, it came back down, okay, to give us a new high low, which is higher, okay, than the previous one, okay? It's higher than this one. Cool? Trying to make it look prettier. But through the process of the market going up, right? Through the process of the market going up, it give us a small infrastructure where the market give us, right, higher highs, okay, and high lows. Let's just do this just like that, right? But this right here is the actual previous low. All of this in here is just small infrastructure within the structure or within the market that's going up. Okay. So I say this for you to learn. Once you learn to understand, okay, I'll skip ahead. Once you learn to understand structure, with for break and retest aspect, the actual previous low has to get broken, or the actual previous high has to get broken for you to get a trend reversal. Okay, like this right here, right? You see how when the market went up through here, let me clear that. Let me make this better. Okay, I don't like it. It's not pretty enough. It's not clean. Very confusing. Okay, I'm just gonna wedge it with a trend line. Okay, to make it very easy to understand. So this is the previous. Okay, where this is higher than the previous one. This is higher than the previous one. That's why it's called a higher high. Now, in the case of this right there, let's go black. Let's make it a bit bolder. Okay. Here, I'm going to wedge it up, right? I'm going to put it inside of a channel. You can see how the market is bouncing within the channel. What I'm saying is, through the process of the market going up, it's not always going to look clean like this every time. Sometimes market will do this, right? As it continue down, vice versa when it's going up. Okay. You see that? So that's still the previous high. And then this is the previous low, to be more specific, previous higher low, previous higher, my bad, previous high, and then new higher high. This right here is the new high low. So while the market was falling, it give us a lot of small infrastructures, on the downtrend where it give us lower lows and lower high. Okay. So the ins and out is very important when you learn to understand structure. Being able to see different type of an uptrend, the infrastructure, understanding where the zone should be, which zone is the major zone that the market is most likely to respect, like the major zones, is very, very important. Okay. Now you see how it went up, fell down. Okay. Right here gives you a head and shoulder aspect, right? It's a bit like a divergence of that head and shoulder. So like this, I'll invert it to be exact. Okay. Boom. Something like this. And then to go up. Okay. That's what I meant. So I don't want to get you guys a little confused also throwing these terminologies and these type of setups. Let me not confuse y'all. Okay. So market did give us, this small little infrastructure, and then to continue with the actual trend to go up to give us a new higher high, right? Once this high get broken, right, we wait for the pullback. It's rinse and repeat. It's going to do exactly the same thing for the most part. It's just not always going to look alike. You like mangoes? Not every mango look the same, but they're all mangoes, right? So I'm only bringing up mangoes because I like mangoes. But look, so it broke structure, giving us a new higher high, right? So again, after a higher high, we are anticipating, right? We are waiting for the market to give us the new high low. So also, the next page, I throw that in there. High low is here because it came down. Now, before it did, right, it pretty much consolidated, right? But within this consolidation, it was still wedging down. Okay. Just want to make that clear. Okay. What I'm saying is, even though the market went up, it was doing this. Okay. See that? It was still doing that. Sometimes it goes up, consolidate like so, and then to fall. This is one high. Okay. It's literally just one high. Okay. We using the high peak, all that fall under the same thing. Okay. Just like here, it falls under one. Okay. This point is literally the same. Okay. It's just that, it could be somewhat a little bit higher. That's just the market giving you a little double bottom within it to continue up. Okay. So right here, it did it like right there, and then it shoot up to break, right? You see how the market just sat at this point, right? And then to continue up, this structure here is considered as the new higher high, right? It may not have retest 50% or 60 to 70 or the full, but it was still the pullback that didn't go as much, and then to continue up. That's still the next structure. So here would be our high low. It could be a little bit confusing sometimes because when you're so used to market going up, retracing so much more, and then it hit a point where it just does this to continue up. Okay. Structure is structure. We have to respect it for what it is. Okay. So this is a bullish trend. Let me see at the moment now. It's a bullish trend with a little bit more flavor into it. Okay. Now, with that being said, I'm going to put a 2-in-1 in there. So bullish market. Okay. So we already know higher highs, higher lows. Okay. Higher highs, higher lows, where each high is simply higher than the previous high, like so. Okay. Where each low is higher, okay, than the previous low. Okay. Just like so. Now, this time around, we're going to go right back to the turnaround points. What caused this turnaround points, right? And what do we do? That's where the zone comes in, okay? So let's go ahead and fill in the blank. It's like the book would be, right? little question marks. We got to fill in the blanks, right? So we could be a little bit color coordinated if we wanted to. So this is our last high. Okay. After a high, a low must come, right? Boom, a low. Higher, high, because it's higher than the previous high. Now we have a high, low, because it's higher than the previous low point. Higher high, higher than the previous one. High low, higher than the previous low point. Higher high, and high low. And of course, after each high low comes a higher high. Very simple. Okay. So I'm repeating the same thing over and over to the point until you can understand it. Okay. After each higher high, anticipate a high low. Now, at each structure point, meaning each higher highs, each higher high and each higher low point, right, is a structure point. These structure points are zone criterias, okay? When you're learning how to place your zones, you're going to place your zones based on the areas the market stopped at to go up or where it stopped at to go down, just like so. The market was buying, right? Out of nowhere, it stops. We don't know why, but the market stops here and it sold, it fell, it went down. We don't know why, but one thing we do know is the fact that it stops here, it went down. So because of that, we're going to put a line. Okay? We put a line. That line is what we call a zone. Okay? When you're learning from me, I don't have time to tell you or use a whole bunch of word salads, supply, demand, support, resistance, all this extra. It's not necessary. Okay? The market was up top. It went down. So you put a zone at the top. All right. You have a top zone. It's just a zone that's at the top, straight to the point. Okay. You put that zone there for when the market comes back to that zone, right? So you can see how it's going to react to it. Okay. Before we get to that one, we're going to look at this one right here. So the market came down. It did the same thing like it did last time. It stopped. Okay. Since it stopped, clearly that's a key level. That's an important level. We don't know what happened. News, whatever it is. Okay. But we know it stops. Since the market stops here, we're going to just mark that criteria level. Okay. Just mark it. Boom. That is a zone. Okay. The purpose of the zone is to simply, when the market come back to the zone, we simply read and react. On the next slide, we're going to hit that. Okay. So at every high, higher highs, and at every high low, the turnaround points, okay, is a zone point. It's an area the market just stopped and turned around. So you're going to mark it. Okay. You mark that area, and that area is considered as a zone. Okay. It's on top of it. Cool. Call it a top zone if you want to. It's at the bottom. Hey, cool. We have a bottom zone. Now, if you care for the terminologies, by all means, if it's at the top, it's the resistance zones. If it's at the bottom, it's support zone. I don't recommend that you use that because your job is to simply read and react to what the market gives you. Next two slide over, I'll reinforce that a little bit, okay? So last previous high market, we know the market went up. It stopped there. It fell. We don't know why, but we know it fell from that point. So because of that, We're going to just mark it. When the market sold, it hit a specific point in time. It just stops and it went up. We don't know why. We don't care for now. But we're just going to mark it as a zone, as a key level, as far as, hey, look, man, it was there. It stopped. It went up. Excuse me. It was up here. It stops. It went down. Okay. So on and so forth. Okay. So, of course, in this book, every page, all right, is dissected to help you learn to understand everything step by step. It's not going to be like this. As you continue with the book, you start putting them together where you mark your highs and your lows and place the zone together. Okay. But you have to learn the structure on their own. You're going to learn it, one, with the line chart.